as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Andrew Bell, the CEO of Red Rock Resources, is joining us today on Stockbox. Good to be speaking to you again, Andrew, and so soon as well.
Absolutely, yes. Such a lot has happened that the last week, a lot has happened since then. It seems like several weeks.
A lot has happened since then, but that's obviously very good. So, I mean, your AGM, how did that go? That was virtual. Did that go as it should have done?
Well, it was virtual. We passed the standard resolutions. In terms of some of the sort of authorization of shares, we withdrew those resolutions because actually, when we look at it, not everybody wanted to give us the disapplication of preemption rights. I can understand that. Sometimes that happens. And after several years of really not using these authorities at all, we've had to use it quite a lot in the last year. But that's because things have really been moving. If we need money, we can always go and get specific authorization from shareholders, and they will undoubtedly like what we're doing, and so that'll be easy. But the truth is, looking forward for this year, I don't really see that we're going to need to come back to shareholders again because we have an investment portfolio of £3.5 million. We have dividends coming from Jupiter. We're going to be issued with Juno shares in the IPO in Australia, and we continue to develop our Australian assets, and we think that will lead to joint ventures, stroke listings in Canada that could well provide some cash spin-off to us, and we have other assets that we may do deals with. So we can afford our exploration programs this year, and B, we may not even have to bear the whole cost of them, and C, we may get money flowing back towards us. But the balance of likelihood at the moment is that we are going to be able to operate well within our existing resources, and we have high visibility of the things that we're going to be doing this year.
Okay. And you also raised £1 million quite recently as well.
Yeah, and that's part of it. We raised the million because we have 3 specific drill programs we're planning this year. One in Australia, obviously, because we have had the first 3 licenses granted. They contain some of our best targets, and some are virtually drill ready. Others, after a short amount of exploration, will be drill ready. And it's probable that the work we start there, drilling, will be before we've raised any substantial money through the joint venture. Secondly, in Kenya, we're about to get our mineral resource estimate update, and as part of that, we will have a drill program will essentially be a part of or added on to that, and so we'll be announcing that at the same time. So we'll be drilling, we'd expect, at the end of the sort of rainy season, which is another month or 2. And in Congo, as we've just announced some geophysics there, that geophysics is leading up to a drill program at Luan Shimba, which is looking very, very prospective indeed for copper-cobalt mineralization. And so we're expecting some shallow drill holes that we will be drilling there. 3 drill holes coming this year. Obviously, we want to be sure that we have the money set aside to do that.
Okay, so lots of drilling, lots of progress. You've got the money to do it. You don't feel you need to go back to shareholders, certainly this year. So that's quite a strong position then, Andrew.
I make the proviso, yes. Our exploration needs won't require that. Of course, there's always a possibility of some big corporate deal, but that's always going to be a possibility anyway.
So what sort of highlights are you looking forward to then, Andrew? Considering such a lot is happening at the moment, it seems, in Red Rock, what are you looking forward to in the short term?
Very short term? Well, obviously the mineral resource estimate, which has been hanging over us, going through the final stages in Kenya, is a near-term priority. Finishing that geophysics in Congo, and is the next. In both those places, then we'll be talking about the drill programs as we go out to tender on them and we finalize the drill hole locations, which will happen. Parallel, our team, our executives in Australia in the joint venture are doing work which will lead to a drill program and identification of drill locations. That'll take a bit longer because the first stage of exploration has to be gone through first, and that's really something that they're dealing with, and we will look at it, but we expect the main impetus and the choices to be made locally. And also in Australia, in parallel with that, there's the licensing, the progressing of the license applications for the licenses not yet granted. We've had 3 granted. We have 6 in the next row, and then we have some behind that. Mm-hmm. And we've now been given in the last few days a quite detailed roadmap or timetable for the grant of those ones. So I think that we can expect the next group pretty soon, much, much quicker than anything that's happened so far.
Okay.
And that's encouraging. And then we've also opportunistically, through our advisors there, we get offered the occasional other thing, and we put in for some license application in Western Australia. I mentioned that. We're not going to make an RNS about it because we're in competition, so it'll be a ballot. If we get something there, time enough to talk about it. But of course, when you're in a ballot, the odds are 50% if there's one other person applying. If there are 2, it goes down. It becomes odds against. So waiting to hear about that, but that's quite interesting area there. So there's plenty going on in terms of news flow in the quite near term, by which I mean the next month, 6 weeks.
Okay, fantastic. Well, I'm sure we'll be speaking again fairly soon, but I wonder if I can just get a thought from you just on the general, let's say, mining or commodity space. I'm seeing a lot of headlines that, we're perhaps approaching a commodity super cycle, and I saw tin yesterday, of all metals, going up very, very sharply. What's your opinion on the market and the cycle and where we're perhaps heading?
We are in an upcycle. There's many indications of that. Of course, the Chinese economy was growing last year. It was about the only place that did. And Chinese steel demand, steel production and iron ore demand were at record levels last year, despite everything happening in the rest of the world. This year, it looks as if there's a reasonably sharp rebound, despite sort of ongoing problems in some countries that have really mishandled the whole virus thing, like this country. But most of the rest of the world is growing quite strongly, and I think that there will be a recovery here. If you look at Japan has just been hitting highs, 30,000 on the index, that it hasn't seen for 3 decades. There does appear to be good demand for the major commodity groups, and the supply-demand situation seems to be quite good. So there's no arguing with what the charts are showing you and what the price performances are showing you. Copper is looking a good market. Gold's looking quite a good market. Silver's looking a good market. You mentioned tin. Nickel is also appears to be coming into a bull phase. So, yeah, I think it's going to be a good market for our kind of company and our kind of project. And we're in some particularly good metals where I think there's really strong fundamentals for them, which are copper, cobalt, manganese, and gold, but particularly copper and gold.
Okay. Well, Andrew Bell, the CEO of Red Rock Resources, thank you very much for your time.
Thank you.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.